Welcome to Trading Lounge and the Bitcoin report for Wednesday, October 27th. And so on the weekly chart here, for the bullish count, we're looking at wave 4 being in play here with wave 1 and 2 here. Now this length up through here, it is longer than wave 1, so technically we could put I'm just shooting the breeze here, we could put wave 3 here and a wave 4 pulling back 38.2% retracement level and then having one more move to the upside to finish it off. However, that's possible, but I don't think it's the case. The normal extension for wave 3 would be just under the 80,000, so we can put that at the 80,000 and we'll put that over there. That's taking the length of wave 1 and adding 61.8% to it from the low of wave 2 would project into the 80 area there. Now the other point is that can this be counted as a bearish pattern at all? You know, can we look at that as an A wave down here and a B wave up here and then a C wave down here? We can do if we leave wave 3 over here, because we can't count down from the top here 1, 2, 3, 4, 5. We can't do that because we've taken the top out here. So it does force wave 3 to be over here unless you want to look at this 5-wave structure in some other way and force some sort of corrective pattern into this play here, which I don't particularly like forcing things, so I'd rather sort of find the right way, the right fit. But the bearish count would look like this. We've looked at it before, and so in this case would be the A wave here, the A, the B and the C for the B wave here, and then coming down for the C wave here. Because it took the top out here, it means it would take the low out at that point. And also, to be fair as well, is that this top that I'm talking about here, we can count Bitcoin in a couple of different ways. So it is possible for it to also make one more high here and then also have this move here as well. So this will be haunting us for a little while yet. The reason that I don't think that this is the case is because simply the strength of this here really plays out like a third wave rather than a C wave, because it's stronger and faster than the A wave, where the A wave is normally quick to react and fast. So what we're looking for in the bullish picture as well is we're looking for, on the bullish side, well, let's just go and have a look at the bullish charts for that matter. Let's go to the 1 day here. So we're just basically looking for a classic trading levels pattern. So in most cases, you know, we've got the old high over here, so it's just natural to assume some vibration, you know, at this space here. And as I've mentioned, it's highly likely, and we should all just chill out and not get too tied up about it. And once it matures more, then we'll have some idea of what we're looking at. The other point here is that this 65, which is a medium level is the halfway between two major levels, 50 and 80 in this case, and we don't have it as support yet. So we were looking at support being like this. So we've got the arrival here and we've got the reaction. We don't really have a good first high above the level. We do in a way, but it's not substantial in any way. But either way, we don't have it. You know, we're still over this side. We're not over this side yet of the trade setup. It's a bit small to call that the first high above the level. It's really just the arrival at that point, like this. If this is the pattern here, the arrival, the reaction, the first high above the level. So one of the things here is that I can look at all of this move up here as wave 1. I could also look at it as wave 3 as well. So with wave 3 would still come back for wave 4, and then we'd have wave 5 here, and then we would have the rest of the pattern sitting here, and then we would move up. That's what I'm thinking. So in that case, then this wave 1 can move over to here, and this wave 2 can move over to here, and then we need a smaller 3. We need a smaller 3 and 4 in this case at that point. So anyway, let's just go into the intraday and pick up this and explain where we are with this particular thing here. So it's possible to have this as wave 1 here, and look at this as 1 and 2 here, and 1 and 2 and 3 and 4 and 5 the third, fourth, 1, 2, 3, 4, 5 here, finishing that off. So that's possible. This will take us down to the 38.2% retracement level at that point, or if it's going to be deeper then as a wave 2, then it'll come down deeper at that point. So I don't think this is the case here for this just yet. I think there's one more high, and yeah, I think this is pretty easy to see when we have a look at Ethereum, and we'll explain that when we get to Ethereum. But let's just focus in on this little move here for the time being. That's the main point, I think. So I think that's going to go over there, and this, instead of that blue wave 3, this will be this wave 3 here, and this will be this wave 4 over here for this. So I should have sorted it out a bit more, but it doesn't matter. We knew that we're going into this. So what we had done is we'd counted down here as 5 waves here, remember? And then we thought, well, okay, there's 2 things that can occur here. We can either have an A and a B and a C wave, or we could look at it in terms of wave B being here, and then wave C being here, with wave 4 over here. But it was a little bit squashy, but still, you got to kind of put all the counts on the table and then eliminate them one by one, and that's what we did. We understood yesterday that we had 5 waves up to that point, so we knew that we could go long above that high. We could look at that as wave 1, coming back for wave 2, and then moving up, but it just wasn't the case. So as an ABC pattern, it's playing out quite nicely. So we can look at this as the A wave, and an A and a B and a C for the B wave. We can also bring that down now and put that over here, but we'll get a better position than that as well. So here we're looking at we're looking from wave B down to wave C, and we're looking for 5 waves. So we've got 1, 2, 3, 4, 5. We'll take a closer look at that in a moment, and then wave 2, 3, 4, 5. So probably the bounce will come from 58. That would be the good buying point. But even as a trader, if you wanted to buy on the low, that's where you do it. I'd probably want to get on top of the 60 with a classic trading levels pattern. So the arrival, the reaction, the first high above the level, supply pushing it down, coming back up, testing that demand again, that supply coming down, and then pushing up from that point. So this can copy and put that there, and that would be the classic trading level setup at that particular point. So all of this here, I think that this would be the A wave, the B wave, the C wave down here, and then from here we'll look for something like this here as the first high above the level, and then we'll have our ABC pattern, and I think that's going to be wave 1 over there, over yonder. So any trades up this leg here you'd need to understand, and we'll work through this as 1, 2, 3, 4, 5, and in the 5th wave there'll be 5 waves in here, so we'll be able to nail that down. Some of my favorite numbers are here. So we've got, apart from 65, which is the most important, 72 is important, 68 is important, and of course 70 is important here. But I don't normally, because we're working so close to the market, all the numbers will become important in their order, of course, but in the bigger picture, the 72, this is the important one here. The only place Gann and Fibonacci meet is on the number 144, but there's not a lot of difference between their ratios really when you map them out, but 144 is where they meet, and 72 is half of that. And then if you understand the number 9 very well, with 7 and 2, and the nine-ness of it all, as they say, that's another thing. But I won't go there either. So that's sort of where we are. I just want to have a look on the tick chart. Sorry for waffling on. So, okay, so this is 100 ticks. This will just give us a little bit better definition. So from the top, we got 1, 2, 3, 4, 5 for the A wave, the A, B, C. There are 5 waves up here. We counted those yesterday, so I don't need to go over those. And here you can really see 1, 2, 3, 4, and 5 here. So we've got wave 1 and 2 in play here. So technically we can go long above that level there, but it's not going to happen. We're going to end up coming down a lot further. But I'll leave it there because it's the process of things, isn't it? Because normally when it first happens, we go to there. That's that once we drop here, that becomes a target just in case we're wrong and it keeps going, and then we can drop it down to that level. Then we always look for the B wave after that. We don't go to these levels. We go to the B wave here, and that goes to there, and then we can go to the top of wave 2, and then we can start working down. Once this plays out here, we can start working down. We're talking 58 because that's an important level. Of course 60 is important as well, but you can see that I'll leave you to count this. You can count this down here, and then you can also look for 4 and 5 to come down to 58 and start building. What you want to see over here, I mean, look, everybody's got their own way of doing things, but I just look for, I don't buy on the lows even though I can pick them. I just want to get more confirmation. So I always wait for the impulse wave to the upside, and then I start to move in across that top there. Or I will buy the 61.8% retracement level here, and the reason I would do that for is because I've got this 5 waves there. If I didn't have those 5 waves, I wouldn't do it, because I got nothing to get my teeth into at that point. You know, I got nothing to back me up at that point. So I could buy here and put the stop under here because I have those 5. I can see them; they're clear. There's no doubt about those 5 waves. It's like looking at these 5 waves here, right? Because we get 5 here, that means after correction we get another 5. You know, so you can trade those things. You know, and if we were shorting, then we'd be short under this level here. You know, so yeah. I want to go back a second, a little back here a bit. Probably to let's check on the hourly chart for a moment. Now I might go to the 4-hour chart because I want to have a look. I want to just talk to you about Ethereum. See, this move up through here, we can count this in different ways here. This may be wave 2 here. I don't know that just yet, but I know there's different ways of counting this little space in here, which throws the wave count out a little bit further. But when I have a look at Ethereum here, just putting this in here, just to there, when I count this from wave 2 here as 1 and 2, and then 1 and 2 here, and then 1, 2, 3, 4, 5 for the 3rd wave here, the 4th wave here, then 1 and 2 and 3 and 4 and 5 up here for the 3rd wave, then I'm looking for the 4th wave. Yes, it is possible to put this wave 4 over here because this move here is in 3 waves, so it's corrective. So it could be possible that we've got this as 1, 2, 3, 4, and 5 up there finishing off. So let's just take a look at that. So this wave 1 is not here yet. So we either make a new high here, we need to make a new high above here. We either make that new high there, and because that's overlapping this wave, this move here, it's likely that this is wave 1 and 2 and 1 and 2, and then building up higher, but we need to move above that high there. We either get that, or we basically come down into this space here, and then we move up. So if we drop down here, for example, then we can move this wave 4 over to here, and then we know that we've got this wave 5 to go over here, and then we know we got wave 1, and then we can go back for wave 2. So this is where I think Bitcoin is. I think it's in the same thing here. It might sound a little bit strange, but the S&P 500 is in the same, pretty much in the same boat as well with this 3, 4, and 5. And oddly enough as well is gold. Now gold had its run up from the 29th of September, so not too far off all of this. And we're also looking for the top of wave 1 in gold stocks, silver stocks, ETFs, and so on. So yeah, all the markets sort of seem to be gelling together a little bit. I don't know if anybody else is starting to notice that, but so that's going to be quite helpful. That's something that we can use, you know. But anyway, I just wanted to point it out. This is probably the Bitcoin count as well, where we haven't topped here just yet. But we'll know soon. We'll know in the next session, because we'll know if that drops, then we can use that as wave 4. And if it pushes up, well, then we know that we still need to get wave 2 to come back at this point. So yeah, not a lot. Our real focus in all of this when it comes to trading will be back over here when we get this correction here, or we get a deeper correction over here for Bitcoin at that point. Okay, so that's just Ethereum, which, I mean, not just Ethereum, I mean, it's the blockchain, isn't it? Part of the blockchain. So yeah, so in a bit of a nutshell, what I think we'll end up doing is bringing wave 1 over to here and wave 2 over to here, and this here will be wave 4 over here in green, and that will go over here. I'm not quite sure yet. It doesn't matter. It's going to show itself anyway, because this is the first real correction we've had from wave 1 and 2 here. So wave 2 is quite big, isn't it? But all of this is really in the same, it all belongs to the same family, doesn't it? It's all from the same generation, the same time, whatever, you know what I mean? It's not, but this, it's breaking the trend line here, so it's typical wave 4 sort of stuff. So we'll just see how far it pulls back. The other point is between that low here and wave 2 low here, they're all pretty much the same. So that's the 38.2% retracement level. So it'll come down close to it. Like that 58 will be the 58, and which is the top of group 2, and then you've got under that you've got 57,200. That's going to be too low, isn't it? Yeah, it's too low. Not to worry, but the 58. Yeah. So anyway, that's where I think that we're at. Yeah, I just wanted to go back to the bigger picture here for a moment. Just wanted to talk about something. So what I wanted to talk about was just the bigger picture here for a moment. Let's just say that this move up through here is wave 3, 4, and 5 there, and then we can have a retracement back 50 or 60% from those highs there, right? It may or may not pull back to this 50-60% here, right? But if it does, then this is going to be the last, because to me all of this pattern at the top here, all of this here is all about the 50,000. That's the balance line through the whole thing. And once that becomes the support, once it's come down and checked and done support, then it's never coming back to this point here. This will be the last time that you'll be able to pick up Bitcoin, you know, under the 65,000, under the 50, you know, around the 50,000 at this point. I've only got 4 Bitcoin, probably a bit more, and I started buying down at 10,000 here, just building in, and went through the ride here. But I'm going to buy another 2 Bitcoin. So, I mean, in Australian dollars, that's about this current price is about $80,000 a piece. So I want to pick up 2 more Bitcoin in this, anywhere in this space. It doesn't really concern me too much, but of course I'll do my best to get the best price I can, or split the bets up or whatever. But yeah, just to let you know where I'm at this point. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.